Like and subscribe to our YouTube channel. Follow us on Facebook, Twitter, Instagram. Heck, we're even on TikTok. We're excited to engage with you. We hope you'll join us moving forward.
Good morning, everyone. Welcome to the Market Mindset. Today, I'm joined with the President and Chief Investment Officer, Stephen Palmer of the AlphaNorth Asset Management Fund. This is a hedge fund, and it's very interesting. I wanted to have someone on to kind of pick their brains about how they look at the markets, where they see things, and what a company and a gentleman and a fund to follow, because I'll let him explain the fund itself. And I know no one likes to brag, but let me just tell you, this fund has, in the last year, I mean, there's tons of awards. If you go to their website, you'll see there's lots of awards. And I know people don't like to brag, but in particular, 2021, they are the winner of the Canadian Hedge Fund Awards on the 5-year. So on their 5-year focus, they got first place. On their 3-year return, they got second. And on their 1-year, they got third. So not that, as we know, past performance is indicative of future, but still, it's always nice when you have awards like that to be able to lean on that a bit. How are you, Steve?
I'm good.
Great
Thanks.
to have you on.
Thanks for having me.
Absolutely. So I know we want to talk about how this got started. I think it's 2007 you got started. You've had exceptional returns all along the way, a lot of accolades, a lot of awards. And that's what we want to see, and just kind of get a sense of what you guys look at, where you see the market, and just kind of introduce people to what you guys do.
Yeah, my partner and I founded AlphaNorth in 2007. We worked for 9 years at a major financial institution prior to that. And so our main fund is AlphaNorth Partners Fund, which is a long bias small cap hedge fund. So we invest primarily in Canadian companies, less than 100 million market cap. It's a diversified fund. What we look for is good risk versus reward situations. So we try to get in early and do multiples on our return on our money, rather than some funds clip warrants, and they're more short-term focused trading.
Yes, and you guys really highlight right in the front of the website. It says that you look for these inefficiencies in the market, and it always brings me back to some of the greatest investors out there who always say, if you can find a market that's not working efficiently, that's inefficient and kind of beaten up or underrepresented, there's a huge potential, and that's certainly, we're sitting in that today. That's for sure.
Generally, it's been pretty tough market since we launched the fund. Like the benchmark we use is a TSX Venture Index, and since we launched, it's down over 60%, which is a pretty significant decline. Yeah. But we're up, I think, 367% in the same time period. So despite the bad market, we've been able to get some good returns.
Yeah, so against your benchmark, that's a huge, when we see such a big loss, that's a huge win, which speaks volumes for your model, which maybe in a future date we can chat about how you look and the model you kind of use. But right now, I wanted people to be aware of this, and primarily because when we were chatting too is, want to get a sense of where you see things, the opportunity that's there right now. And it's always more impressive to have someone who's done it for so long to come on, help educate us a little bit, and kind of remind people of the opportunities that are out there right now, especially with all the chaos that's going on.
Yeah, there's been quite a bit of chaos in the small cap space since peaking in February. Like small caps were the best performing, or the TSX Venture Index actually was the best performing index that I could find in the world off the low in March 2020, but it peaked in February and has since declined 20-ish%. But I think it's now broken out of that downtrend, and given especially the time of year that we're at, where there's some seasonal strength, December, January, February, for example, are the best performing months historically for the Venture Index. It has been positive 80% of the time during those 3 months, with an annualized return of 58%.
Nice.
So that's a good backdrop. One other thing I look at is the returns from December 15th to the end of the year. The last 2 weeks of the year have historically always been positive for the venture. So that's 31 years out of 31 years, it's been positive. So this time of year, we look at situations that have been beaten down and we go all in.
And I mean, that ties, the seasonality is really interesting because it ties into, say, especially with a lot of, say, junior mining, there's going to be a lot of people who take advantage of tax loss selling because it's like, hey, listen, I took a bit of a loss. I can sell it, buy it back in a month or 45 days or whatever. That kind of factors in, I guess, to this strategy. But that's interesting. I didn't know that gives a sense of urgency for someone out there who looks and says, huh, I wonder if I'm interested in your fund. There's a bit of urgency why you should be interested sooner than later.
Yeah, well, we're in the best performing months of the year historically.
Yes.
And I think the venture is breaking out and going to have another leg higher here. If you look at all the various sectors, like cannabis is corrected significantly, the junior golds are still in a rut. The biotech stocks have corrected significantly. Like basically across the board, you've seen things pull back, and I think it's a good time to get in or add to positions.
Before I kind of ask if someone's interested, they want to find out more, we'll certainly put up right there your website and how to reach out to you and contact you. Let's talk a little bit more about what to look forward to. And what I'm hinting at is the inflation, what's happening, and how you guys are uniquely positioned for that. What are your thoughts on inflation? What do you think in the short term here, what we should be looking at? And then also let's talk a little bit about if someone is out there and wondering at different funds they should be looking at and taking advantage of this small and micro cap market with someone who's been winning a lot of awards for a lot of years, how they could reach out to you and get in touch with you.
Yeah, you can. Well, my contact information is on the website, www.alphanorthasset.com. So the fund, we accept subscriptions on a monthly basis. So you can do that. In terms of inflation, that's been pretty topical lately in the press. I tend to be more on the transitory camp. I know you're not supposed to use that word anymore, but it basically just means that there's been a temporary significant bump in inflation. I think a lot of it's caused by the supply chain issues and the abnormal demand for goods that everyone at home has not been able to travel, so they're just buying stuff. And I think that's going to, next year, it's going to become more balanced. The supply chain issues are going to go away, and there's not going to be as large a demand for goods. There's going to be more on the service side, people getting out, traveling and whatnot. If you look at the number, I think 6% was the last number we saw in the US, but like 2% of that number, or like 2 out of the 6, so 1/3 of that number is made up of fuel.
Yeah,
because we've seen the oil price go from $36 a year ago to over 80. So that's had a big impact. I think fuel prices were up 50% year over year. You have used car prices that contributed another 1%. So those two components are half the inflation number. And those numbers are not sustainable. Like when you start moving out into next year, those numbers are going to become negative, in my opinion.
Okay.
Especially for used car prices. You can't have used cars like the way they have been.
Yeah.
I've heard stories about people buying a car and driving it for a year and selling it for more than they originally paid, which is ridiculous.
Wow.
So those are going to actually contribute negatively to the inflation numbers. So I believe inflation will moderate by mid next year.
But I like looking at the enormity of the infrastructure being built. Like if we're going to implement all this 5G, electric city, future of the world kind of thing, new energy. This is actually a good time with things having kind of slowed down a bit to start implementing a lot of bigger projects, bigger plans, bringing on whether it's energy wise, whether it's building out infrastructure and building out properly with more of a carbon neutral framework in mind. How do you feel about those kind of general themes looking forward, all of these kind of technical plays or more tech plays but in what people call boring in boring markets like infrastructure. Normally people go, oh, it's infrastructure, not interested. It's pretty bland, pretty boring. But there's lots of interesting upside with it.
Yeah, we focus more on situations that have something proprietary.
Okay.
Like something proprietary that has competitive advantage, that has a lot of growth potential, rather than some of the boring infrastructure service businesses. Or we do like all the green energy related businesses. We think that's a theme that's not going to go away anytime soon.
So and of course, we're not going to talk about individual companies, but like just themes. Overall commodities, like in Canada, we see a little bit of a shift back to that. How do you feel about that?
Yeah, I think that the supply demand picture is quite positive for many commodities. We've been adding recently to some of the battery metals in that space, like some rare earths, copper and nickel, also been a focus lately.
Nice. And then of course, with these themes, it's always a matter of, and we touched briefly on it when we were chatting before, is it's one thing finding something that you think is a winner. That's one thing. And you're like, okay, I think I've got something. But the flip side, which is equally as challenging, is when do I sell it? And we're talking just like theoretically there, but walk me through, maybe you've got a story or just kind of reiterate to people, and it'll remind them when they've had that winner and they didn't sell it, it went up, it came back down. But that discipline of knowing when to sell can be almost as equally as hard as finding the winner itself.
That's, in my opinion, way harder to know when to sell. To investment professionals, it's pretty easy to identify an attractive entry point. But what really distinguishes people with performance is when do they sell? Like there's a lot of people are happy to make 50%. They think that's great and they're out.
Yeah.
If you can identify those situations that are going to go up by multiples, like something like a Tesla or Facebook or whatever, those situations, and you can hold on for a longer term, makes a huge difference in the performance numbers. So that's what we try to do. Like once we buy an investment, the cost is somewhat irrelevant. If we have a double, that's not a reason to sell it just because you doubled your money. We still look at the fundamentals and what the potential is from that point. And we also use technical analysis mostly to help time our sell decisions.
Yes.
So like, for example, fundamentally, we think something is worth, let's say $10, and the stock gets to that level. We're not going to sell it just because it got there. We'll look at the chart, and if the chart still has a good momentum and we think it looks higher, we'll hold on, and maybe we sell it for 15 or 20 at the end of the day.
Yeah, it's got to be a lot more challenging. It's one thing if you've got a friend, like say myself, and I sell a winner too soon, and you feel the pain, and you think, oh my God, and it's great because hey, it's a winner. But it's another thing if you've got a fund and someone calls and you exit. That's a lot more explaining to do to people because it's again, you've got a winner and it's running. That sell, the pressure is a lot further than if it was just me and I can kind of go, well, I got out early, but
yeah, it's not the end of the world for me. Like we have so many investment ideas coming through every week that there's always somewhere to reallocate the money. So sometimes we do get out too early, but you got to look at what do you do with that money once you get out. If you transfer it to something else that then goes up by 50% really fairly quickly, it doesn't matter if you sold the other one a little bit too early.
Yeah, and I guess it's that thing that, I mean, if you've put the work into finding, say, a project with management, the three things come together, it's a good time, it's got a good structure, and you've found it, is if you sell it too soon. Once you sell it, there's a lot of work to go find the next one. I mean, even if you're getting deal flow all the time, it's a lot of effort to go bye-bye to that one. And if they're hitting milestones and they're hitting all the check marks, yeah, sometimes it's just better to go with the story. It could grow, it's scalable. There's lots of room, especially with micro and small cap.
And a lot of times things do correct, and you can buy them back if you sold too early. Like, yeah.
So what do you think, just when we're wrapping up here for the end of the year, you guys have had an incredible year. What are the couple things just to someone to kind of mull over, other than this first thing you let off with the last 2 weeks ending up strong. That's a pretty motivating factor people should look at. But what else is something someone should kind of consider right now? Because they're winding down their personal work and they're looking about their what the year ahead. What would you suggest?
Well, I think now is a good look for situations that have been beat up, where the fundamentals may still be intact. Like there's been a couple that we followed that fundamentals are unchanged, but they just kind of got caught up in some of the sector weakness. And now's the time. Don't like we're in the best several weeks of the year historically for small cap. And that also applies to the Russell 2000 in the US. It's got very strong numbers over the last 2 weeks of the year. I think the numbers there are like, it's like 49 years of data and 95% of the time it's positive over the last 2 weeks.
I think it goes without saying that you're pretty optimistic for the year ahead anyway, as well.
Well, for the next month, for sure.
Yeah.
And I do think that the venture has corrected. And it's broken out to another leg higher. So I'm pretty excited going into next year.
Excellent. Well, I really appreciate you spending the time with us for now, just to kind of get us up to speed as to your fund, the incredible success that it's had, and sharing some of your knowledge with us. We really appreciate it. I love having guests on that are looking at these like markets that have been kind of ignored to some extent, because there is so much possibility and so much growth there. And we look forward to keeping in touch with you as well to see if we can pick your brain some more, some of the themes that might be popping up here in January, and of course to see how the fund's doing.
Sure, sounds good, Andrew.
Well, thanks so much, Steve. Have a great day, and I really appreciate the time.
Okay, same to you.